Alright guys, in today's video we're going to do a brief update on FCEL. It has broken the channel and it actually is trying to go higher. I think it's going for $30, but there is something I want you to keep your eyes on. We're going to discuss about all that coming up after the intro. What's up guys, this is JC and welcome to the Wealth Engineering channel. It is imperative that we learn how to manage our money, because once we learn how to manage our money, we can take control of our true wealth, which is our time and our freedom. This is exactly why I created the Wealth Engineering School and this channel. We pay attention to everything that is stocks and crypto related to find the best place to grow our portfolio. If this is something that interests you, I want you to smash the like button, subscribe, and click the bell. To my subscribers, thank you for your support. And if you're new, welcome to the Wealth Engineering community. I have interesting links in the description below to help you start your financial education journey. If you want to learn how to invest or you started investing in the last 3 years, make sure you check these links out. You don't want to miss it. With that said, you came here for the truth. Let's just dive deep into it. All right, guys, let's start with this news. CNBC last week released this news, and CNBC has a massive reach, especially for the retail investors. And they came out and say, hey, hydrogen is going to take 25% of all oil demand by 2050. An analysis from Bank America is saying this, and this is good news. This is great news, especially for us hydrogen investors. Currently, I'm still out on FCEL, but hey, I promised you that I was going to do updates on this stock. So here we are right there. I wanted to show you a couple things, especially on the graph that are brewing. So we're going to start talking about that. First, let's put it on a weekly chart and analyze the weekly chart itself. So when we look at the last 2 weeks, we're challenging this nice channel right here, which is technically a bullish channel, but the price are actually going even higher than this very steep channel going up. And the last 2 candles, they're actually broken this channel right here and still pumping up. Now, what that tells me is that it tells me that there was a strong rally and then there was some selling pressure right here. And the price is starting to build some selling pressure. Now, this might continue next week where it's rally all the way to $25, even $30. But right now I have a green line right here and see, but you can see that the price is starting to find its next resistance, and it seems to find it near $25, which is an important price, a very psychological price, especially for people who've been buying the stock since it was like below $1. Now, something I wanted to show you as well is when we put it on the daily chart, there's a couple things happening. So first, there was a fake out. Then the price dipped. This is when it was dipping around $15. Now, that could have been a great entry for you guys right here, especially for you long-term investors. If you had sold it around $20, you could have bought it back around here. Now, here's a couple things. I want to show you this. And let's look at this point right here. All right, this point right here. You can see that the price, there were a couple of fake outs where the price was starting to pump out of the channel and then drop back in. This happened right here as well. And if you look at this and we're looking at this, it's almost the exact same pattern where there was a nice bullish pump and then it rejected and then it recuperated, it accumulated to pump back up. But the next candle after started to decline and decline back. And the candles after started to dump. All right. So we're having something similar happening where we had a nice candle to break the channel, a dip, then another nice candle to dip a panel, and then we're starting to form a pattern where we might even get down on this channel again, which is very important because we can see what happened since. We can see that it formed a lower low, and that was forming a lower low where the price was accumulating down before it started to pump back in. Now, I don't think it's going to wait that long until the price starts to really pump again. I think this accumulation pattern here allowed many people to accumulate on the stock, so it wouldn't be do something as similar, but it's something to keep in mind, and I'm gonna show you what to watch for, especially starting next week. First thing you need to watch is you need to follow that EMA 21 daily average and see what happens when the EMA touch that channel right here. If the EMA breaks that channel, then it's safe to assume that we're officially out of this channel and we're going to form a new high, a new, not all-time high, but on a high in a very long time, basically another 52 weeks high. Now, we may be very well do that if the EMA 21 cross past this orange line right here. However, if we get a rejection from the EMA 21 and the EMA 21 starts to curve and it's on the way down, then that's actually a bad sign for the next couple weeks, even months, for FCEL before it starts pumping back up again. So this is very important to see. Now, when we look at the other indicators, there is some interesting pattern forming as well. Now, if we look at the RSI, we can see that, okay, the RSI is almost forming a bearish divergence. If we're looking at it from this perspective, from November 20th all the way to now, I guess we're still on a downtrend. We have to break this before we can safely say, hey, we're going to break new highs. But the other interesting thing happening is this low right here, all right? It's actually lower than this one right here, all right? So we can actually say that, hey, if this continues, we may be forming a smaller, like an upward pattern, but it's too close for comfort. This is almost like on the same line. So some other person can say this is actually a resistance building for the RSI and the price cannot break this point right here. So that would be actually a more valid point. And if we try to break through, we got a rejection. We try to break through it again. We got a rejection. And now it seems that the price are not strong enough to even reach that previous resistance. So this is going to be interesting to see. And now we can actually validate that downward pattern. So next week, the other thing to watch on the daily chart is what does the RSI decide to do? Does it decide to go lower? Does it decide to challenge this and get rejected? Or does it break through this and go challenge this line again? So these are the couple three things to watch. But if we get rejections here, rejection here, we might start to visit the lower trend on the RSI started like below 60. And that would actually be a good thing for the stock because it would actually give it some room to catch its breath before it starts pumping again. But this is something to look in mind. And that's one of the reasons why I haven't jumped back into the stock. I know it's doing a lot of push back up, but the market structure-wise is a little bit too high for my comfort, and I would rather see a rejection. And if that doesn't happen, then I'm very comfortable with the way I invested so far in FCEL. So I wouldn't mind not jumping back in, because for me to double my money again, it would have to go to 50, and there could be a chance that it does that this year. And there could also be a chance that it doesn't. But if it gets around $20 or even $15, then that's definitely a price I would be very interested to buy, even around 10, because my chances to double my money again will most likely happen because this stock is going to be on fire all year long. So this is definitely one of the things I wanted to show you about. If we put this chart on the weekly, we have a different trend. Like the ADX is widely, the bullish trend on the ADX is super high. You can look at it's pumping all the way up. The MACD is also going all the way up, and there is a huge separation between the two lines. So it's also saying that, hey, next couple of weeks we might see more volatility on this stock. Look at the RSI. We are reaching 80 on the RSI. This is super overbought area for this stock right here. I would feel a lot more comfortable buying this stock below this red line right here. In the last couple of weeks, even on the weekly chart, the price has not been visiting below overbought areas. So this is a red zone for me right here. Usually what I would normally do is I would actually wait for the price to start dipping before I sell all my stocks. But I really wanted to invest on Dragonfly, and I'll make my next video about Dragonfly so that we can see what's going on. But I wanted to start investing and build a nice position on Dragonfly, so that's why I took away my stocks on FCEL. But I really wanted to show you this. This sector right here is not sustainable on long term. It's going to make a drastic market correction at some point. There's a lot of talk about market crash happening. We saw a 600 points down on the market today. So if this continues next week, that might force the market to correct itself, and we might see another price dip around 20, even $15. I think if this continues, we might even see EMA 21 on a weekly touch this zone right here, which is right around $10. So this is what I'm expecting long term, like next month, I would say, for FCEL. Or I might be entirely wrong. It might actually be a fake out, and it actually might start pumping all the way past $30. This could very well be likely, but this is what I would keep an eye on if you're invested in FCEL. I would definitely, if you start taking profit at least, and watch out what's going on with this, because we never know. When we are in this area right here, volatilities are high and correction can happen, and most likely will happen. With that said, we'll talk on the next video.